Hello, and welcome to our podcast today. My name is Jennifer Ugwoke, and you're listening to the episode 2 of the RFS Money Talk show. From the beginning of time, finance has always been a hard nut to crack. But who says we don't have hammers? The RFS Money Show is the podcast that brings to our doorstep the hammer needed to easily crack the hard nut, which is finance and everything money matters. Breaking down complex money topics such that at the end of every episode, your knowledge cup is full and overflowing with realistic, applicable finance nuggets, equipping you more than ever to conquer every money hard nut thrown your way. Catch the engrossing breakdowns, intricate interviews, true life stories from the horse's mouth, personal experiences, commentaries from industry experts, tips, and useful financial advice that will take your financial level from a 0 to 100. Welcome again to episode 2 of the RFS Money Talk show. Today, we will be talking about important things to consider before leasing a car. Leasing a car seems to be a fairly exciting offer. It allows you to drive a new car every few months without any hassles of responsibility. All this without the big monthly payments makes it a popular option among the youths. However, it is not as easy as it sounds. There are few elements that you can miss while finalizing your agreement, and this will turn leasing into a scary experience, ultimately impacting your credit score. Here are a few things that you should remember before leasing any vehicle. The first thing should be consider if you prefer buying to leasing. Most millennials tend to assume leasing a car and car loan are similar. While they do share similarities, there are key differences you shouldn't overlook. Buying or leasing depends on your personal preferences as well as the need of the hour. Buying means once you finish making your monthly payments, you will own the car. It will be your assets. With leasing, you're not building up equity, and when the time lapses, you will have to make new payments for a second lease. Vehicle leasing is not as simple as making some payments and driving the car stress-free. It is a better option if you're financially not very sound. It also allows you to get a new car every 2 to 3 years. The low monthly payments are enticing, but leasing can turn out to be an expensive affair in the long run if not done properly. Whether it is a purchase or a lease that you ultimately decide to go ahead with, understand the pros and cons of the deal. Secondly, you need to decide which car model works for you. Analyze your needs and look at what car can resolve your issues. Do you need a comfortable or luxurious car, or do you need a vehicle that can accommodate your large family? Apart from number of passengers, it is also beneficial that you analyze the need behind investing in the car. Is it going to be used for short distance trips, or you want to have a car that has great fuel mileage? Those primary questions can help you narrow down your options, and then you can select from the best available alternative. Thirdly, you need to check your credit score. Some of you may ask, oh, credit score, this is Nigeria. Do we do that here? Of course, definitely. Your credit score definitely does exist, and you need to check your credit score before you decide to lease a car. Car leases are typically reserved for people with a good credit score. Any firm leasing a car to you would want to be sure if you're financially trustworthy before striking the deal. Leasing is not difficult if you don't have the perfect credit score. However, it will be a hard bargain. Take my word for it. Now, the fourth thing you need to consider and you must do is negotiate the cap price. Bargain is the key word. I repeat, bargain is the key word. The price of the fleet that you will lease is called the capitalized cost or cap cost. For your benefit, you want it to be as low as possible. Most leases assume that since he's not purchasing the car, he doesn't have anything to do with the base price set by the manufacturer. Bargaining here will help you in reducing the overall amount of your monthly installments. Most people who lease are unaware that their monthly payments will be based on the final agreed upon price. Cheaper vehicles will usually have lower monthly payments compared to expensive ones. Tell the dealer you're open for a fair deal, but since you're leasing, you're certainly not in for paying the full price. The RFS Money Show is sponsored by Roosevelt Finance. Roosevelt Finance is a financial firm and award-winning member of the Concept Group, licensed by the Central Bank of Nigeria, CBN, to provide loans, leases, and investments to eligible individuals, SME businesses, and corporate organizations. Another very important factor you must not miss out is having an estimate of the residual value of the vehicle. You have to have an estimate of the residual value of the vehicle. A vehicle residual value is the car's value at the end of the lease. The higher this price is relative to the capitalized cost, the more favorable it is to lease a car. Cars with a higher residual value will amount to fewer depreciation costs. This ultimately means the lease won't weigh heavy on your pockets. Research, ask the experts, and compare the values of different brands, cars, before sealing the deal. Now, another very important factor. Do not forget the money factor. This is usually what people refer to as the interest rates in the leasing business. To convert the money factor back into an interest rate, multiply it by 2,400. Just as with a traditional interest rate, the lower the number, the better. Those with a good credit score should try to reduce or even eliminate the money factor. Yes, if you have a great credit score, just try to reduce or take away the money factor. Now, another important consideration you must have is consider the cost of depreciation. Depreciation is the difference between the value of the car when it is with the dealer and its residual value at the end of the lease. In the lease contract, the lessee has to bear the charges of depreciation. Be mindful of this while choosing the vehicle. You should look up lease ratings to see which cars retain their value better and will therefore be worth the amount you put in. Also, you need to have a gap insurance. Now, listen. Most lease contracts have a provision for guaranteed asset protection or gap insurance. The gap, just like its name suggests, fills the space left vacant in traditional automobile insurance. Gap refers to the difference in what you still owe on your lease and the value of the car. It protects the lessee if the car is totaled by paying the remaining difference between the actual cash value of the vehicle and the balance that is remaining. Before you sign a car lease, ask whether the contract will include gap insurance coverage. This is very important. Do not forget to ask whether the contract will include gap insurance coverage. Now, not exactly the last, not the least, and not the last. Well, the last but not the least. Choose the lease vendor wisely. Be mindful of unforeseen expenses. If you haven't leased before, a car lease agreement can be full of an unfamiliar language. You must know all the details before signing the deal. First, identify if the deal will close-end or open-end lease. A closed-end lease means you typically don't pay anymore after you return your vehicle, unless under exceptional circumstances. And in some cases, you never return your vehicle after payment has been duly met. Also, have an agreement on what happens when lease is up. Unless you have the rules already in place, settling the account will be a task. Read carefully what the end of lease expenses include. It is essential to remember that the car lease doesn't imply that you are not liable for the maintenance of the vehicle. If your car has damage that goes beyond normal wear and tear, you could be charged additionally when it's time to return it to the dealer. The definition of normal use can vary from dealer to dealer. Hence, ask your dealer what is already included in the upfront amount that you will pay. Ask till when is warranty in place and what all does it cover. It is also wise to discuss the terms of premature termination. Usually terminating a lease before it's up can be extremely costly. You can also check if the lease is transferable. Read all the fine print before taking the plunge. Now, I hope you learned a thing or two or even three from these very insightful tips I have shared with you on the factors you have to consider before leasing a car. And I hope that as you look to invest in automobiles, look to see if leasing is made for you. While you won't own the car at the end, you are still responsible for excessive damage to the fleet. Modern lease companies also come with inbuilt car rental management software. These provide real-time data on parameters like fuel, mileage, and maintenance. Now that you know all the essentials for the leasing process, all you need to do is find the car that is right for you and fits your budget. And remember that Rosabone Finance has the most perfect finance lease for you. You can own the car of your dream in 48 hours. Just send us a message, a DM, or you can call us. Please click the links in our bio to contact our reps today. I hope you enjoyed this podcast and see you on the next episode of the Rosabone Money Talk show. My name is still Jennifer Ugwoke and catch ya!